Good morning everyone and welcome to Morning Markets from True Potential. Looking at asset market performance from yesterday, we had a weaker day in equity markets. Follows on from a relatively good start to the month of September that we've seen across equity markets and indeed across global equity markets. Yesterday, a bit of a pullback, no real specific trigger that one can identify for that. In the case of the US, there was a number of comments or commentary from a number of institutions, really just highlighting valuation levels as a concern. I'd probably contend that that's not something that's new news. Valuations have been something that has been discussed by ourselves, by market participants for the past number of months. The other thing is, I suppose some has been pointing to seasonal aspects of how the market typically performs in September, etc. Basically looking for a rationale to explain the move. Actually, that's why at True Potential believe in the role of diversification and the role of diversification within asset classes. It helps mitigate this narrative for these ongoing movements within asset markets. Number of comments yesterday, I think, is also quite noticeable that there was a bit of a subtle shift between those that were calling for a reduction in the support from central banks versus those suggesting that it's maybe becoming slightly difficult to withdraw some of that support, given that we've seen that maybe are passing through that peak in economic activity recovering. Again, I think we would argue there that a lot of the responses that we're seeing were put in response to the emergency situation of COVID-19. Those emergency measures do need to be rolled back at some point and in the near future. I think also with that, it wasn't surprising with the pullback in equity markets to see the bond market perform a little bit better. So in the US, we saw the 10-year come back in a little bit, closing the day at 134. Gilts and German bunds didn't actually see that much of a change over the course of yesterday. Looking to today, very much about what we're going to hear from the ECB. You'll remember over the past couple of weeks we've touched on some of the commentary from members suggesting that it's time for the ECB to ease back on its Pandemic Emergency Purchase Programme, or PEP. And that programme itself is currently purchasing about 80 billion euros per month of bonds. Let's see what we get from the ECB today. Might be too soon for them to take or have a consensus view on that reduction, but we'll report back on that tomorrow. Just looking to Asia, Asia's followed US markets slightly weaker this morning. In China, we've had inflation data both at the consumer level and at the producer level. If we look at consumer inflation, increasing 0.8% year on year, 0.1% month on month, continuing with that decline of consumer price inflation increases that we have been seeing. I think a lot of that is very much driven by local factors in China. However, it's not really internationally driven, very much about domestic food prices. I'll leave it there for today. Please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.